So, order flow. This is a hotly debated topic. Some people say order flow is dead. It doesn't work anymore because the algos or all those kind of things. That's not entirely true, or not remotely true, I should say. Um, an up bar isn't just there, right? A bar opens and it closes higher, right? It's an up bar. There was a certain dynamic that unfolded, and it may be clear, it may be unclear, but there's a couple different ways that up bar could have developed. And we're going to talk more about that. We're going to look inside the bar, right? That's what order flow is. Really, time and sales data. What is that? One trade happens. There's a couple pieces of information attached to it. How many contracts were traded, aka what was the volume? What time did it occur at? And was that transaction into the offer, or was it those 5 contracts or whatever it was it into the bid? What was the volume? Was it into the bid or the ask? And at what time did it occur, right? That's price, time, and volume. Those are the data points that we have for trading. And this is order flow is just a very granular look at how it all comes to be and what are the dynamics, the ways in which bars form, right? We know things go higher or lower, but what were the underlying forces during a bar, during a rotation? Remember that single up bar, right? It could be normal, where I would think the bar looks like this, right? It's an up bar. You could have just a normal bit of buying pressure, which caused the market to go higher there. You could have a lack of participation, which would be very perhaps light volume. There could be a large buyer who is not actually reaching across and lifting offers, but simply on the bid, and then maybe the offer goes higher and the bid steps up a tick higher, and then the bid steps up a tick higher. There could be a lack of participation with just a large bid kind of being here, and then it goes to here, and then it goes to here, right? As this bar goes higher, but there wasn't necessarily transactions occurring along the way. It could be really, really strong buying, right? Someone really quickly, aggressively just, there's 300 on the offer here. There's 400 on the offer here. There's 200 on the offer here. And someone says, I want to buy 900 contracts at the market right now, right? Strong buying, really just wiping out offers. There could be too much, question mark, buying. Too much buying. Okay, so for a particular sized up bar, I know we don't have any relativity here, but for normal rhythm and volatility and things like that, you gain a sense of relativity with bar size, what's big, what's small, things like that. And so if there's a ton of buying, that is, there were thousands and thousands of contracts bought, and maybe, a recent bar looked like this for an up bar, and it only took 400 contracts to buy to make it go that high. And this was 4,000 contracts, and it only went this high. That's one of the ways that this bar could occur. And then there could actually be selling, and that's kind of this same scenario here, except there's people transacting. So, this is like a dome, okay? And you have all the people willing to buy at these various bids, right? And you have all the people willing to sell at these various prices for offers. And so in this same example here, there's a really, oh no, I'm sorry. It was this example where there was a really large, no, it wasn't. I don't know which example it was before. That doesn't matter. What we're going to say here is there's a really large bid right here. And you've got some sellers who say, okay, I want to sell into that. Fine. But this bid is so large. In fact, they're kind of like, they're working a bid, but they're aggressive. They want to get fills. So they could actually, maybe if there's no more people willing to buy here and all these guys are done, and then the best offer is up here, this large bid goes here. I think I had it right in the first place. The large bid steps up, and then there's some people who sell into that. So you have a passive buyer, but you have aggressive sellers who are hitting that bid, and it keeps stepping up and it keeps stepping up, and people keep selling into it and selling into it, but it keeps coming higher and it keeps getting even bigger, maybe, right? You could have an up bar, which formed over this 5-minute period of that dynamic occurring, where there was actually selling during the up bar. Net aggressive selling. For every buyer, there's a seller, right? Like whenever I'm not saying that there's only selling occurring because there's a passive buyer. But the way I read order flow and the way I'm going to show you guys to read order flow, we focus on looking at the aggressive behavior. Where there's aggressive behavior and perhaps a lack of movement, when we talked about too much buying, well, that's going to show us that there's a strong passive participant. But we look, what is aggressiveness? There's bids and there's offers. A buyer is aggressive when they say, I'm tired of sitting here waiting to get filled. I'm going to go pay what you want, and I'm going to buy it there. That's an aggressive action. And remember, time and sales data, that would show us however many contracts. When that person got tired of waiting, they went and got aggressive and lifted the offer for 27 contracts. That is going to show as 27 contracts at the offer at 9:37 and 15 seconds a.m., right? That's the data we're dealing with here. For a full by-the-book classical NADRO type trader, order flow is low man on the totem pole. It is the least prioritized tool. But that doesn't mean that we can't use it and find it useful in areas and whatnot. Far from it. But it's important to note that we always have to keep order flow in its place. It's NADR and then finally O. And that's kind of a top-down approach, and that's kind of a hierarchy of importance. So we have to use it where it's appropriate. It's our lowest time. Remember the randomness, even when it comes to a yearly and quarterly and monthly and composite structure confluent narrative. How many people do you think are positioned for that and looking at that and identifying that? A lot. But when we identify something on order flow, and how much energy do you think for the higher time frame narrative does it take to change that narrative? It's massive. We're talking about thousands and thousands and thousands of people and firms and organizations making decisions to change that course of events. But when it comes to an order flow read, like doesn't take but maybe one large player or something like that to change that read. So it's very fickle. It's very here than there and things like that. It has to be kept in its place. Do not stare at order flow all day thinking you're going to just be in tune and on the most granular level with what's going on in the market, because really you're just going to get whipsawed and head faked, and you're going to start to get too far into that, world, which is more and more and more random the shorter time frame you go, right? Don't try and decipher that. This is the number one kind of mistake is just thinking that any little blip here or there. I get questions all the time. Well, Merritt, what did you think about this divergence in order flow here or there? And I'm like, it's inconsequential. Order flow had flatlined. Price was fluttering around in the middle of DVA. There was no narrative to lean on. Why do I care what order flow was telling me there, right? Use it in the right place. Use it where it's appropriate. Don't try and decipher every single tick of order flow. So that's what not to do. What are we going to be able to do? How are we going to use it? We're going to identify strength and weakness. We're going to see what the contextual order flow picture is. So there's almost like a short-term order flow picture and then a contextual order flow picture. We're going to see if there are clues, tiebreakers, right? If we're a little bit on the fence with some decisions, order flow can be a really nice tiebreaker. Yes, we as the order flow think it's a great idea. You should go for it. Or, you're kind of indecisive about this entry. You could kind of take it or leave it. Order flow says it's a terrible idea. Hey, let's pass on it. It's a great tiebreaker. And as we mentioned, we can identify not only aggressive behavior, which is what we'll look for most of the time, or lack thereof, but sometimes that it shows us where there's actually passive participants dominating a market. And I don't know where to insert this caveat, but here's as good of a place as any. Order flow has been off the past month and a half, not consistently, not every day, but there was especially in early September. In fact, I think it's gotten better as of late, but I can tell you that during early September and at a couple points during this year, order flow is absolutely berserk by the way I'm going to teach it to you, by my standards, by my decades just over a decade of watching short-term price action and order flow. So I've said this, you guys have probably heard me say it. Order flow could die, right? And there's a large number of would-be, could-be, used-to-be good traders out there who didn't adapt and they didn't evolve as markets evolved and things like that. So I'm never going to sit here and tell you guys order flow, this is how it works and this is how it will always work, because markets change, market participants change, dynamics change. Even the laws of market dynamics, those can evolve and change over time. I think they're pretty robust. I think they speak to a lot of, auction processes and things like that. So they're most likely going to hold up pretty well. But order flow is something that, it's some pretty specific ways we use it, and it's kind of just my take on what I've observed over the years and what works and what helps me identify even better opportunities than narrative alone. But it can change over time. So we have to admit that. We have to acknowledge that. We don't, I don't mean to scare everyone away from order flow right now, because by all means, it's still fine. But we got a bit of a scare recently with, hey, is this going to keep working? Like, wow, this is really off. So we'll continue to monitor. It's all about strength and weakness. It really is. We have an up bar. Was that a really strong up bar or was that a really weak up bar, right? We're looking inside the bars to determine strength and weakness. That is order flow in a nutshell. I personally do not care about potential trading activity. I don't care about where there's limit orders that are, large. I don't care about where, some of these different tools are that show you where there's passive liquidity resting. I don't care if there's what percent of the total book is bids versus offers. I don't care. I care about the transactions being made and who's most impatient, who's getting aggressive, and how does that fit within the overall context and narrative of what we're seeing. So that's what we're going to talk about today. Some people say it's trade flow, right? That's just kind of a different way of talking about it because it's actual trades. I could say order flows actual orders. So that's just kind of a play on words. But identifying strength and weakness, it is similar to strength and weakness of pure price action. What do we talk about in the price action section of this course as identifying a weakness in price action? What's one pattern? Flag. That's right, Nick. If we see a move like this and then a move like this, this is weak. And why is it weak? Well, it's literally, the angle. This is really weak. This would be even weaker. This would be really strong. This we might call normal for the current volatility or something like that, right? So it's all about the angle. Imagine that we've got like, this axis, right? 0 degrees, 90 degrees, right? So, 80 is going to be really strong. 45 might be normal, right? 30, 15, I don't know. I'm making up these numbers, but these are weak and super weak, right? And you just flip that for, the strength of an up move, strong, really weak, the angle. And what is the angle or the slope, either way of the movement? Well, it's about essentially how much y-axis we're gaining per unit of time or per unit of volume, right? Rise over run. Taking us back to pre-algebra or whatever it was in high school. It's a form of speed, isn't it? Like if you're going very steeply, typically that occurs pretty quickly. And let's not forget the force or the amplitude or the duration of the move, essentially. Might not be duration, but it's the length in either X or Y axis, typically Y axis in this case, right? So, this is maybe strong, but what about this, right? That's stronger because it went further. So, we could apply this to price action. We can apply this to how much order flow is being done per unit of time, how much aggressive order flow is being done, right? So we read it the same way, it's just different data sets. Okay, so before we start really diving into the concepts and whatnot, we'll talk about getting some charts set up and what we're going to use. 2 tools. Both are just very simply graphical representations of the time and sales data. Most of you probably read my blog post on you're not still using the time and sales, are you? ? And these are the tools that I recommend for people to use because it consolidates that information. It displays it graphically, historically. You don't have to remember what you saw whizzing by. And sure, if you did stare at the tape, the time and sales, actually, could you get maybe a slightly more granular view of the speed of the tape? Maybe. But typically, when the speed of the tape is high, you don't need any order flow tool to actually see that. I know I can see it by looking at a price action chart, right? It's up, down, up, down, up, down. It's moving quickly. The ticks are coming through quickly. You can tell that prices are changing quickly. The speed of the tape is high. I don't need to look at time and sales to see that. Same goes for the cumulative delta or footprint chart. So what are those? Cumulative delta, it's just an indicator we'll put in a pane. You all probably already know. It's below my main intraday chart. And it's simply a running tally of how much volume was traded at the ask minus how much volume was traded at the bid, right? So the more positive that end cumulative delta number is, the more buyers are being aggressive. So it goes up. We're lifting offers, volume at the ask, with less volume at the bid to subtract away from it. Therefore, the net aggressive order flow, the net cumulative delta being difference between ask volume and bid volume. Cumulative just means it's a running tally rather than just maybe a bar by bar reading, which resets at 0 each bar, right? That's all it is. Instead of staring at the time of sales and seeing whether it's a red or blue line because it's at the bid or the ask, this is saying how much volume was if we had a sequence of events come through where we had 2 contracts trade down at the bid, and then 4 contracts trade at the ask, and then 2 contracts trade at the bid, and then 5 contracts trade at the ask. Well, the cumulative delta is going to be 4 plus 5, right? All the volume done at the ask minus 2 plus 2, right? So that's 9 minus 4. So we are plus 5 cumulative delta, right? And so as that continues to come through, it was 5, and so it was plus 5 on the chart, right, on an axis. And then the next bar, by the time it's said and done, we're at plus 10, so it's here, and it draws a line. And then a bunch of selling came in, and we were only plus 1 for the session, right? And then a bunch more selling came in, and we were minus 3 for the session. And it just plots where that is over time in a subpane. So we'll get you set up on a chart there shortly. In the footprint chart, it also shows the exact same data, but you pick a bar type. For example, we could pick a 1-minute bar chart. And for each 1 minute, right? So here's minute 1, here's minute 2. You have 2 columns for your bar chart. And for every single price level, right? Let's say there's like a couple different prices here. It's the S&P, so it's 33.48.50, 33.48.25, 33.48 even, and then 47.75, right? Well, as we trade those prices, let's say during the first 1 minute period, well, first we had I forget the numbers, 2 contracts at the bid right here when we were at 25 cents, and then 4 contracts at the ask. And let's say that the best bid and the ask drop down, right? And then we trade another 2 contracts into the bid lower, and then 4 contracts into the ask at the 25-cent level. And I forget what my other numbers were, right? But let's just say that we traded 10 contracts into the bid, which dropped, and then we traded 10 contracts up here, right? So you end up with, it'd be a 0 here and a 0 here. You end up with something that looks exactly like this. And then let's say 60 seconds is up. So boom, that bar is done, just like a normal 1-minute bar chart. And we started over here, 3 contracts and 0 and 15 and 275 and 5 and 0. It just shows you how much volume was traded at each price level, and it puts it in the left column if it was into the bids, and it puts it in the right-hand column if it was into the ask or the offer. And it just builds that up over time. And if we trade back up, to this price, whatever, and trade, 10 more contracts, this goes from 10 to a 20, right? It just updates until the time is up, and then it goes to the next one, and then this will never change again, right? So it just shows how much volume was traded at the bid and the ask at each price level for whatever periodicity you're looking at. Cumulative delta, it's going to match whatever it's an indicator to a chart, right? So it's going to match whatever periodicity your chart is. If you're looking at a 1-minute chart, it's going to show you the cumulative delta for each 1-minute period as it rolls along. A footprint chart, however, is a standalone chart. It's on its own, so you need to choose a periodicity and whatnot. So I think that's all I wanted to say. Let's set them up. We're going to apply, again, delta to our trading time frame chart, and the footprint is a standalone chart. So let's bring over this guy. Just had some old lines and stuff on here. All right, so let's just maybe scrunch these up. And what we'll add, well, it doesn't really, we won't worry about the layout right now. So for now, let's add cumulative delta. So we'll go to analysis, studies, and just start typing it in. Cumulative delta. Now notice there's cumulative delta trades, up, down, tick volume, volume. Volume is the one we want. Cumulative delta bars volume. Double click it to apply it. Should be pretty standard. Nothing you really have to mess with. My settings, reset at the start of the trading day. Yes. I've got mine grayed out, so it's just like basic kind of gray here, but I think it's probably going to come in your standard like green and red, and you can just adjust those colors to whatever you like. But that's that. Boom. There is delta. So what can we see about, delta during the session today? Well, it went higher, didn't it? So we'll get a lot more granular on what we can see. But in general, today we can see that, buyers were the much more aggressive force. I can tell you that getting to 32,000 is quite a high level. In fact, it's more than we saw on the rip roaring, almost getting parabolic Friday. That was only at 16,000 or whatever. So this is a ton of aggressive buying that we've seen in the S&P today. Another thing that we'll go ahead and add are some levels so that we have like a little bit of a landscape, a little bit of reference points as to where delta is rather than just being on this big open blank canvas down here, right? We're going to add a lined paper a little bit. So I like to add a study called horizontal lines. Not at time, that's going to be a vertical one, but this one here, horizontal lines. And again, I've got mine set by default, but I'll show you. No, it's actually, because this is a different chart book, I guess it's not set by default. So let's set it up. So you just put in the value. We need to put it to chart region 2. Okay, so if we just applied this, you can see, okay, it put a dotted line at 0, right? Because everything else is set to ignore, except for a gray line 1 is drawn as a dotted line with a 1 width thickness. Let's beef it up. Maybe like 10. That might be excessive. 8 looks about right. Other levels I want are 2,500 minus 2,500, and these will all be in the slides later. 5,000 minus 5,000, 10,000 minus 10,000. I think I have a 15 in there, but it's pretty not that important. I know I have a 25. We'll just do those. Okay, so 9 different values. Let's go turn them on. Click, click, L, enter. Why didn't that work? L, enter. Oh, that's annoying. Sometimes you can get away with just doing that. 8 and 9. So boom. I'm not going to take up our time and change the colors there. I would not leave them bright green like that. But that's kind of the framework I look at. I really like the 10,000, so I'm going to make it thicker as well. So what numbers were that? Oh, I hit the wrong thing. Horizontal lines. There we go. Plus or minus 10,000 are lines 6 and 7. So let's make 6 and 7 the thickness of 4. There we go. They'll really show up. And we'll just change their colors because I feel like it. Boom. Okay. That is cumulative delta all set up, ready to go. It's very important that you get your session times right. Chart settings, we're set up to start at 1800 Eastern. You do the conversion to your own time zone, whatever you have your PC clock set to or your Sierra chart timing set to. Yeah. Okay, the other chart is a footprint chart. So let's just make a new intraday chart. And I know that my pretty standard type footprint chart is, oftentimes, even when volatility moves and ebbs and flows a little bit, I don't change it maybe as much as I should. I don't know, but I do like kind of a 16 tick. I realize that should change with volatility, but I've just kind of kept it a bit the same lately. So 16 tick range bar, you can just put in 16R enter. And for those of you who need to see what that looks like, that is just range bar standard in ticks 16. We'll just change this to ETH. Doesn't really matter unless you're adding VWAPs or volume profiles or something like that. And I know it's going to need to be zoomed in a lot because remember, we're going to see 2 columns of data. And so we go to analysis studies. It's called numbers bars, right? That's what Sierra chart calls it due to, copyright or whatever. Numbers bars. So when we hit apply there, I'm not even sure what it's going to look like, but yeah, it's 1 column of numbers. It's all colored based on how much volume there is or something like that, right? There's a million different things you can do with these footprint charts. For us, let's go into some settings. There's a lot of settings, but for us, it's going to be simple because mine's very simple. Column 1, okay, that's like your main column. Each of these have. Right now, it's telling us volume, how much volume was traded. Well, let's look at bid volume by ask volume. I want to see both of those things. So there you go. Bid volume by ask volume. I know, okay, the background type, I don't really care. So when it comes to background coloring, we're going to change that to none, transparent. We are almost done setting up our footprint chart with all these million settings in here. The other thing I want here is highlight non-zero bid ask volume at the high or low. I want that to all column 1 with extension line until future intersection. And I don't like the colors, so let's just make it grayed out. And I don't like how thick that is, so let's change the thickness. Boom. That is pretty much the footprint chart you saw of mine this morning. I do add a delta, not cumulative delta, bar by bar delta, but it's not that important. Ask bid volume difference bars. You just apply those. So there we go. So now we have, you'll need to, get your scale set, right click, set the scale to constant range. We can scrunch things in more. You just have to be careful that they don't overlap or cut off any large numbers. That's about, well, this is too big here, so let's make that smaller, and then that gives us more room up here. There we go. That's going to be what our footprint chart looks like. So, but if we zoomed in a bit, what is this? Okay, when we got to the high of day up here, 18 contracts traded into the offer. It's a 0 on the bid here because the bid never got up there while the offer was here, a tick higher, and someone slammed into the bid. So there's a 0 there. Right now, if we watch this in real time, there's a 30 contracts have been traded into the bid here and 0 into the offer. That bid would have to drop to the next price level, and someone would have to pay up into the offer for that 0 to change. Right now, you can see we traded into the bid. That 61 went to like a 64. Okay, now the bid and the offer are here. Anyways, our charts are set up and good to go. Again, this is delta just bar by bar, right? So a lot of buying, a little bit of buying. Here's an up bar, which actually occurred on majority net selling, right? So we'll come back to this. We'll look at a bunch of examples and different things. But let's go back to the presentation. Charts are good to go. So let's talk about delta first. We can identify moves that are weak, right? The underlying forces behind the move is weak. We can identify contextual or overall control by buyers or sellers. We can identify a very dominant passive participant, and we can also watch for key inflections. A lot of those levels that I put up on the chart can be key inflections. So most of the times, what do we want to do? Like, don't even look at any of this stuff, right? What do we want to do? If you're going to take an imbalanced pullback long, if we're here and you're going to get long here, what do you want this selling from here to here to have looked like? Ideally, we'd love for the sellers to be pretty weak and just limping along and barely able to get price lower. If the price action is flaggy and the delta is flaggy, right? That's identifying some weakness. It's no different than analyzing price action like we talked about. So that's kind of ideal. There's a lot more nuanced things, and if the sellers were really, really pressing but not getting much for their efforts, that would be something else entirely. So, there's a lot of things that we'll dive into. But in general, don't overthink it. Don't try and be a Delta rocket scientist this coming week. Look for some easy stuff. Look for a move that you're interested in trading that's confirmed that the tape is weak on the opposite side of the tape that you're looking to get into. So here was the Friday ramp in the S&P. The ultimate high of day, the highest point we got to, 32.96 or whatever up there, was the first time in that sequence where Delta failed to make a higher high as price made a higher high. So what I want you to see is that we made this high corresponding with this. And then obviously we sold down a little bit. Delta sold down a little bit. And then price ramps pretty much twice as high as this, right? This rotation is like twice as high up to here. And delta didn't quite get up to where it was before. So that's the first time we saw some kind of a weakness during that sequence. By the way, we're sitting here riding the +2. I wasn't even planning on talking about this, but like, what does this look like to you? Pretty weak selling, isn't it? Pretty flaggy type behavior there. So fast trend type deal there. That was right where we had just accepted above some areas or into some new things, and then we run across the CVA and all that good stuff, right? So are we considering an extreme fade? Price has been moving upwards. What do we think? First, let's look at the first sequence. We have price had been moving up to get to this potential, extreme fade type sequence. But then what happens? We see a bit stronger selling. Okay. What do the buyers have? Are the buyers just going to rip from here? Is price just going to rip from here? What happens? Flaggy price action, very weak flaggy delta, very weak. And so the sellers start to take it aggressively from there, right where that kind of begins to break. That's an extreme fade play you can take. I understand that the trade location's not from exactly developing value high or from the 1.5 or whatever, but that's a sequence where if, it doesn't matter. Like we don't have a context we're looking at here. What if this was a perfect, breakout pullback short, right, of a recent 3-day bounce? Well, then that's a trade you want to take. We're rotational on the session. We're looking for extreme fades. It's an A+ type setup for us. And you get that type of a sequence. Sellers come in, buyers are now weak. You've got the recipe, right? Look for the turn and go with it. You've got strength in your favor. You've got weakness on the counter rotation. Go for it. Yesterday, again, before we got really, really overheated and fast trend, right? This was where the sequence began to shift. Market attempts to go and balance up. Let's see what sellers have, We've been rotational, right? We could easily push an extreme and stay rotational. Rotational days do that a lot. So do we come up and then just see sellers go nuts? Well, at first they're aggressive. I'll give you that. But do they keep pounding it? No, they don't. And in fact, when they try and sell it from here to here, right? In fact, this is kind of after breaking a flag, if you will. And they try and sell it here. What does that look like? Oh, that's this. Nobody's selling that thing. That just drifted lower on nothing. And then the buyers come in strong, ripping it. So if you're antsy or uncertain about, do I really want to get long here? I wish it would pull down here and give me a little spring pattern, and so I could get long from developing value area high to the tick, just so I can feel good about the perfection of the DVA that I want to create. Well, guess what? We're starting to get time acceptance. We're starting to hold it in balance, and there's nobody selling this thing. Good luck trying to get lower prices, right? The order flow is helping us, giving us clues as to maybe how good of a DVA location we might get, Same thing on that extreme fade in the last example. If the sellers are strong here and the buyers are just really, really struggling, you may not get a good extreme trade location. It may just start to go and you got to participate. Remember, context is king, guys. Don't focus on the shiny new toy of order flow and forget context. NADR and then maybe O at times. That's what we're dealing with here, okay? So that's kind of looking for weakness. And really, we could walk away from the presentation and wipe our hands clean, and we would be good to go if you guys only from here on out looked for confirmation on getting some weakness on the tape to fade that weakness and align yourself with strength, with some semblance of narrative backing you. You could be a rock star with just that. But I'm going to tell you more and more about what I know and things that I use and how I see things, because that's what we're signed up to do here, okay? But I really want you to know that like cumulative delta, look for weakness. That's just fantastic stuff. You don't have to get any more complicated than what we've just covered. And you'll be no lesser of a trader for it. Okay. Contextual order flow. So, what we talked about so far is markets ramping higher, right? And delta does this, right? So this is what we call kind of a divergence, higher high versus a lower high, right? But in general, all you need to look for is, were the buyers weak? I don't really care if it's a quote unquote higher high versus lower high. You can see it. Look at the angles, right? Were the buyers weak or not? You tell me. But what we've been talking about so far is what we call short-term order flow, looking at kind of rotation to rotation, delta move to delta move, what those look like relative to each other. But we can also zoom out a bit and look at what we call contextual order flow. Remember when we made our cumulative delta chart and looked at today, what did it look like? This, what's the general trend? Oh, well, it's higher. That's a one read on contextual order flow. Another is delta neutral, which we'll talk about, which is really, are we in plus territory or minus territory for the session, with some specific setups with that as well, to be used within context, that is. So we can monitor throughout the session, at least at very important areas, what's the overall strength weakness picture, right? If you've got delta that looks like this, and then this, and then this, and then this, and this, well, buyers are contextually in control, aren't they? You could very well get something to happen like this, and then a weak up move, right? And maybe price is making a much higher high, and all of a sudden you identify some weakness. That's not a contextual shift yet. We'll kind of look at the general trend and say, okay, not until sellers take control enough to push us down here is there a real shift, a contextual shift in order flow. So we got the micro versus, the short-term order flow read versus the contextual order flow read. Don't overthink it. Don't get too precise. We're going to talk about some trend lines and things like that. It's no different than the price action trend lines I talk about. Don't get overly precise with them. They're kind of training wheels to help your eye. Keep it loose. Does the tape support the thesis or not contextually? We can monitor it, right? We're going imbalanced. Looks like some pretty healthy, higher highs and lows, that type thing. And then into the close there, we certainly saw more selling. You could argue there was a bit of a shift there into the close. This was, again, that Friday sequence, yesterday, last session. But, it was strong. Here's where we get a kind of a confirmed shift. The bulls were in control, although not getting much for their efforts, which we'll talk about later. So there's a little bit more advanced topic to this conversation here. But in general, buyers are in control, and then the bears take over, right? We've seen bits of selling. Okay. Well, where's the buyers? That's different. So maybe this is the best line in the sand you've ever seen in your life, and we might go for more of a VWAP trade location. Maybe not. Maybe it's not a trade at all. It's not like specific, like don't get overly precise with the trend lines, like I said. Just keep it, be aware. Hey, buyers were contextually in control. And now there's the shift in the pattern of what's been happening on the tape. That is significant. Not to mention, we had this, it's overall contextually, not contextually, excuse me, DVA is rotational, rejecting upper extremes. And this is a little failed break. This is a little upthrust pattern here, isn't it? It was compressing, right? And it goes and fails with the shift on the tape. Delta neutral. So, delta is a read of energy and aggressiveness, an inventory, how the collective participants are positioned. If delta's been higher and higher and higher, you can pretty much guarantee that there's more people holding long positions than short positions. It's not an exact science, but in general, it's going to hold up. So where delta is relative to neutral or zero, literally zero net delta for the session, it can be important. And you see the market care, actually. How delta reacts to zero actually is a thing. So when it comes back to retest the zero area, especially after having just broken through it, that's what I refer to, and the NADRO student community refers to as a DN, or delta neutralization. I know that's a mouthful, but I really do see it as a neutralization of the overall inventory, especially as it's shifting from more shorts to more longs and things like that. People stopping out at break even, and it makes a lot of sense that you could see this occur in markets. It's kind of like a price action based breakout pullback or return pullback, however you want to think about it, because we don't have a interior edge and exterior edge of a distribution in this case. But we'll just say breakout pullback. It's like a breakout pullback of the zero line. So you can see I have a couple places highlighted here where we interacted with, this is zero delta, right? This will be like plus 10K and plus minus 10K. And you can see the market reacted to it, reacted to it, reacted to it, broke, retested, reacted. And then this is kind of sloppy, but in general, let's use more of a medium-term rhythm, shall we? Let's look at the overall strength weakness picture and see what that looks like, right? You could still call this delta neutral. If you're getting into this, by the way, it's an imbalance pullback, right? If you're getting into this trade and you're getting into it right here, you want to see the neutral hold from the positive side. And you should feel good that we pressed into neutral from below, pressed into it. The sellers were in general were weak. The buyers came back in and took us into positive territory. Sure, we've dipped back below a little bit here, but that's just, areas, not lines. And sometimes it is very, very precise. Other times, not as much. That's okay. You're just getting long here. We're back kind of below zero technically. You want to see us be able to hold back above zero. That's going to give you confirmation to hold that trade. What if all of a sudden you're in this trade, maybe it's working, but delta's like pressing, just like grinding into zero and starts to really turn from there, That's not going to be a good omen for that trade, which gets into more advanced management techniques, some stuff you guys may have seen me do this morning with quick scratches and things like that, where stuff's not looking good. You save yourself 1 R here and there. It can be a big deal, but that's advanced. They're most effective, just like regular breakout pullbacks. They're most effective right after condition shifts. For example, let's say that this is, a distribution, right? Like this. Well, this is just a destination, isn't it? This might be a better type short, but really we're just kind of compressing into it. Not really compression, but we're revisiting it. And again, you want to short this one? I don't. Pretend this is price action and a CVA, I don't want to short that one. My goodness, we're just third time pressing up into here. Okay, there's the micro breakout pullback, which was this, by the way. It was a micro imbalance pullback, actually. And here's kind of the real neutralization test, which was the real imbalance pullback. Now, is this a fantastic delta neutralization? It's an imbalance pullback again. No, it's not as good. The condition shift occurred here. So if this is such a strong imbalance, why are we back at delta neutral again? That's not a great sign, right? So just like breakout pullbacks, the ones after fresh condition shifts are best. And then if you're gonna get imbalanced and leave that area, you shouldn't be dealing with more delta neutrals. Those are not going to be as good of signals, right? It's actually signifying a form of weakness in that market. I have no idea what this slide is. General trend, strength or weakness. Bonus topic, late rotation capitulation. Okay, I can see it. All right, so here's 0, and we're trading along at somewhere along the lines we went negative. I don't know if there was a prior delta neutralization or not. Okay, and then we start to stabilize starting right here as we get below the -2. Okay, that's normal. Let's see what the imbalance pullback might hold. And you have these moves here, which are really almost on no buying whatsoever. But then you have these attempted sells, which don't have any selling with them either. So kind of lackluster through here as we develop this complex pullback. Then the buyers continue just grinding it. This is an overall weak move. And then where do buyers get really aggressive? Late in this move right here, which corresponds with this wick. You very well may have been short here. You may stop out here. But once that thing slams back down and the bonus topic here is when you see capitulation, you see the most aggressiveness that you've seen on a counter rotation at the end or late in rhythm. We don't know if it's going to be the end, but late in rhythm, we can identify at the hard right edge. A lot of times that's just somebody that just finally puked a position that was short before, right? Now they're buy, getting out of that position. And then it's a wick, and then the momentum starts to turn, and then boom, it's kind of like a delta neutralization. This is very zoomed in here, so this is like -500 delta or something like that, right? And the seller's obviously strong, right? So if you want to know whether you should keep holding, if this thing's just going to reverse, well, guess what? The sellers are really strong in your favor. If it's a good narrative, hold it. If it was just a scalp, then maybe use order flow and different things to help you determine where to exit. General strength weakness picture in our favor, neutralization picture, contextual order flow in our favor, late rotation trap or capitulation or stop run, whatever you want to call it, helps out as a bonus here. And it's an imbalance pullback. Let's pull the string. Let's put the risk on. Would have loved to have seen something like that this morning. Delta neutral, seeing some examples here. We tried to hold neutral early on, and then it fails here, right at the point of kind of lower extreme and failing to stay, or not getting imbalanced at all, unable to hold delta neutral. Here's the micro. We never really tested it, right? You didn't get like a normal kind of delta neutral test after the micro one. That kind of happens here. But really, that's quite a bit of selling. It's like a pretty good contextual shift. So you've got a bearish contextual shift. You've got delta neutral the real first time, So, there's some complexities and things to it. Sometimes you have a bullish order flow sequence within a bearish order flow sequence, just like this, and you have to say, hey, it's some of each, and so therefore it's just neutral, and I'm going to keep using my NADR, and order flow is not a major concern here. It's undecided. That's fine. You don't have to have a strong, great order flow read for every trade that you take. What happens later on? We are again at neutral, but this isn't, remember earlier I said when you're imbalanced, you don't want to see neutral again. Well, when you're rotational, seeing neutral is a little bit more acceptable because that makes sense. Your rotational intraday, buyers and sellers are kind of equal. Order flow is probably going to be around neutral. So to see this little wick of neutral here, and then what do we see next? We see the buyers come in, right? What can you see? Extreme fade as we pull back. What does the selling look like? Does it look like that? No. It looks like that. That is that's a place where the tape says sellers are really weak here. If you've got a good reference, if it makes sense to get long in this area, order flow agrees. Let's get aggressive. Sometimes we can identify that dominant passive participant that I alluded to. We call this absorption. If you have a buyer that's really aggressively buying, and if a buyer is really aggressively buying, what is the delta going to look like? Well, it's going to look like this. Okay. Maybe it was putting in some rotations before. Maybe price was doing this. And then at this moment in question where the buyers start to come in strongly on the delta, maybe price does this. So we have buyers aggressively buying anything they can get, but price isn't going up as it normally would. Remember, you got your sellers, you got your buyers, and all of a sudden we've got a buyer being really aggressive, really aggressive, really aggressive. The delta shows that because there's a bunch of contracts trading into the into the offers. So cumulative delta is headed higher. What's the only way that that dynamic occurs and price doesn't go like this? There's only one reason that could ever occur, and that's because there's actually a large, strong, dominant, whatever you want to call them, passive seller right here and right here and right here, large. And so you've got all this aggressive buying lifting those offers, or trying to at least, but there's size that's sitting there absorbing the buying. So these last 2 points here are nomenclature. In this scenario, there is a passive seller absorbing the buyers. Or we could say, which means the exact same thing, the aggressive buyer or the buyers are being absorbed. The passive participant is the sponge. They do the absorbing. The aggressive participant is the water trying to flow. Sometimes the sponge absorbs the water. That's absorption. Can you spot the absorption? Who gets absorbed here, buyers or sellers? So, same slide as before. That's right. Good eye. 100% correct answers in the chat. It's this right here. A lot of buying. I mean, it's persisting until like right here. So we made an up rotation, right? When the buying started. Makes sense. Okay. And then you see buying, 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 all from here to here, right? Which is where price was coming down. So guess what? You got a lot of people who aggressively bought who are now essentially trapped. You got this long inventory. By the way, this is 10,000 delta, so it's quite a bit of inventory there. And hey guys, we're all trying to break down the doors here, but it's not budging. Uh-oh. Start heading for the exits. Heading for the exits. Everybody be calm, be calm. Okay, panic. Right? Get out, save yourself. Now, absorption doesn't always work out that way. So we start out with like phase one, if you will, where it's what I've taught you so far. Look for strength and weakness. Let's go with strength. Let's fade weakness. Now, we go to phase two when we identify absorption. We actually are not fading strength. Well, excuse me. We're now actually fading strength, aka the aggressive participant, right? This is the strength. But in this case, I'm telling you, it's actually short opportunity because of the strength getting no results. How do we know if the aggressive participant's going to win or if the passive participant's going to win? We don't know. But I'm telling you my thought process right now for how I approach that. Normally, phase one, normal. If I see this on the delta, that means I'm looking long. You know, in a simple example, context aside. Price and price is doing that as well, right? Well, if we go to phase two, when we identify absorption, that means that, well, we saw this and then price only did that. Now we look to fade this strength. Fade the order flow strength, that is, right? There's a weakness in price, but we're fading because the real strength is by the passive seller that's absorbing all that order flow. And so my take is that when I first identify absorption, I now look to go with to fade the trapped aggressive participant. I believe that the order flow, when I first identify absorption, in this case, buyers getting absorbed, I am bearish that order flow. However, we could shift to phase three here. If all these buyers are getting trapped, they're getting no result for their efforts, right? They should be squeezed out of their positions. Remember, just like we looked at on the real chart here, buyers press, 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 buyers trap, trap, trapped, buyers squeezed out. If that doesn't happen fairly quickly on the next rotation or two, if there is no squeeze, I go essentially back to phase one, which I call phase three, where there was absorption. I'm with you, but now they are so relentless that I think that the odds favor them being the winners rather than the passive participant being the continued winner. There may be a passive seller, but it didn't turn into aggressive selling. Nobody squeezed out all those buyers, and the buyers can come just continue pressing and pressing, or come back with a vengeance or whatever, and go for a second push. So if I see multiple pushes of absorption, I'm no longer looking to fade and go with the passive participant. I'm looking to get back aligned with, and this is just my read on order flow, right? This is not like my entire trading strategy, okay? Compartmentalize here. NADRO. This is just a little O part at the end. So that is what I think is a very, very good, very, very special way of handling absorption. Because at the end, look, we never know what's going to happen next at any point in time. But I think that absorption has a cause and effect relationship. And if those participants that were absorbed are short-term participants, and they either don't care to squeeze out, or the other side of the tape can't squeeze them out, I'm going to shift back to going with my normal, let's go with the aggressor read on order flow. Sellers press, 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 press. There's no squeeze. Watch out. Things can go back to normal. So we're up here. Sellers press, press, press. Right? What do we see so far? Let's back up. Strong selling with strong selling, right? Quite a bit of an up move, very weak. Okay. So we're bearish that rotation. Strong selling, strong selling. Strong buying. Quite strong buying. Sellers press, 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 and get nothing for that. What should we see as we enter kind of phase 2 read, where we say, okay, a lot of trapped sellers here. They could really get squeezed out of that position, having to buy back. But it doesn't happen, does it? There's a couple little blips. You see like wick, wick, wick. And here's the real try, right? They try and push it. Nothing happens. And here comes the sellers back again. They didn't get squeezed, so we could use that as a reversion back to bearish instead of being bullish because of the absorbed sellers. Now, I think this is a good time to point out when you see just absorption, 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 and it's lasting for hours, just forget it. Like, it's not going to help you. The market is just being passively driven that day. Or you see something where, price is doing exactly what it's doing here, and order flow just looks like this or this, forget it. That's just a longer term dislocation. You've got a passive buy or sell program that's running, and some firm or whatnot is trying to work a position throughout that day, and they're having a large impact on the order flow that day. It's not impactful to our trading. We're still going to have rotations. And so when it's the time we really don't use order flow is when you just see it really get dislocated from price. Just stop using it, period. All righty. All right, let's look at a sequence here. Okay, at point 1, we have, you know, a little bit of absorption. We have from this point here, which is this point here, and I realized the buyers were not very strong. We had really strong selling and then kind of weaker buying. But, you know, we had the same amount of selling here as we had buyers previously. So we're kind of forgetting about this for now and just starting the example at the open kind of. Here's how much buyers pressed for that. And then sellers push back just as hard, but we don't go back down here, do we? Right? If price were to react the same way to the same amount of delta to the upside and then to the downside, you know, whatever that is, 2,000 contracts, well, then price would be back down here where we started the move from there, right? So there's a little bit of absorption of some selling there. Okay. What do we see at this imbalance pullback? Weak sellers. Number 3, what do we see here? Well, it looks like a decent amount of selling, but not really seeing price go down. So there's a bit of absorption there. What happens at point 4? I would call it a shift in the tape. I would call it some form of just general contextual order flow shift, right? Something like that. Could you have drawn a trend line here and said contextual order flow shifted there? Yeah, I got you. But I'm just looking at the general ebbs and flows, and then that changes. Okay, it changes here. That's going to be obvious no matter what trend line you draw or anything like that. At that point, you got to admit something's changed. Okay. What do we see at point 5? Well, my goodness, like, okay, some strong buying has come in here. Okay. And then there's some selling that occurs, like, okay. But then, like, price is headed higher. Like, where's the buyers, you know? There's really no one buying that thing at all. And this is a case where one could argue, oh, well, the sellers are pressing, but price is maintaining higher, so that's absorption. This is where it gets tricky. I think that in general, you have a little bit of selling with a little bit of down move. You have a little bit of selling with a little bit of a down move, right? Those are actually the thing that's pretty normal. What's abnormal about that sequence, you know, at 5 and after, is that when price is going higher, there's really no buying behind it. And then what is this at 6? Late rotation, capitulation type stuff. There's been no buying this whole freaking up move from here to here. You know, ever since we had the imbalance pullback was the last time we saw some good buying. And then there's just been non-existent buying as we drifted higher. And now you're telling me somebody wants to just slam in for 5,000 contracts or whatever. And then, by the way, it gets slammed right back. If this was a really good contextual area, I mean, that's a place where I might take a short going against an established imbalance. Again, very aggressive. I don't want to, get you guys worked up around little things like that. But that's a really nice order flow signal following that whole sequence of events. So those are just some things that you could read along the way. Are there major implications to each one of them? I think at point 1, you could say, okay, well, I'm okay going with that imbalance because there's a bit of absorption there. I think at point 2, you could go with that imbalance because the sellers are really weak. If you're looking to take this imbalance, well, we've got, I'm not sure if this is neutral or 10K or what this is. I think it's 10K. Yeah, I'm pretty sure it is. But anyways, that's a trend getting pretty hot there, going beyond 10K. Spoiler alert. So that's a trade you could take. Some selling here got absorbed, which, by the way, makes sense. This looks like a market that's passively driven through here, right? It's just kind of grinding, stepping up. Contextual order flow shift. Okay, so heads up. This is bearish. So maybe you don't take that. Maybe you don't even take this, because guess what? The sellers are really pressing now. A lot of times in a really good trend where a destination hasn't been hit yet or something, a contextual order flow shift may just mean that there's more of a complex correction that needs to kind of work out, which is exactly what we got here. The selling subsided. The buying didn't really come in here, not much. But how much selling was here compared to what we had seen was not much. The angle, right? Weakness, some weakness, complex pullback. The flag pattern starts to shift, right? A little bit. This could be an entry. And again, we're talking about imbalanced pullbacks here, right? They're all intraday setups. But now we're just adding order flow reads and taking a look at what's going on. And little things could help save you from getting stopped out on a sequence and looking, actually, seeing a complex pullback unfolding. So delta levels. Remember neutral, 0, right? That's the big one. Think of it just like price action relative to, giving you a breakout pullback or whatever. We can use 0. This is for the S&P and crude. 2,500, 5,000, very minor references. Really, the big ones that I care most about are 0 and 10,000. That is plus and minus 10,000. I've also got plus and minus 15 and 25,000. But 0 and 10 are the most important. Here's all the images that I've used in what I think is the entire presentation so far. Look at price just hitting these levels, right? And I only looked at this after the fact, where we, you start to, I said, okay, well, now I need to find some examples of the levels or whatever. And I was like, well, I've already got 10 examples of price here. Well, didn't really hit much here, but that's essentially how I see it. Can't stay through 10, get back to neutral, 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 neutral. Can't quite get to 10, back to neutral. Try and hold below. Looks like this is plus 10,000, right? Trying to hold it, big absorption there, right? Cracks back through, then it holds it from below. Gets to plus 10 here after neutral here. Tries to hold, fails, retests, probably headed lower there. That's the close though. So, I don't need to go find more examples, because kind of miraculously, markets, it's got to be algorithmic. Can't quite explain it, but 0 and 10 especially, and then those other smaller references, they certainly react to those as well. Examples: 10K going from plus 10K to minus 10K. The implication of 10K is a lot of times pretty good for trendiness. This is kind of one of those bizarre order flow days where you have a tremendous amount of selling, but price is really holding in there. So don't get sucked into the shiny new toy. It will lure you in and you'll say, wow, Merritt showed some good examples. This is like, it just all works so neat and perfectly. Nope. It's extremely unreliable all over the place. It's not some magic formula, magic bullet. It will lie to you. You will think it says something, and then what? It makes sense. This is the shortest term thing. And remember how random markets are and things can change on a dime. Narratives included, much less some aggressive participant somewhere, right? So I'm just trying to keep you with a healthy respect for what order flow can do for you and what it can't. The goal of this presentation is not to jazz you up and think that you've found the next magic thing. It can help, but it needs to be kept in its place. Remember, oftentimes it's a tiebreaker. And also remember, I gave you those levels and whatnot for crude and S&P, which, by the way, crude barely trades anymore. So it's like not even going to, just high levels at all. So find ways that for example, I'm going to talk with students in the room. I posted a comment earlier about, my goodness, look at crude delta hasn't gone past 2,500 for 5 sessions. That's insane. So maybe we'll adjust some levels in crude. Maybe we'll find some smaller levels, right? Maybe 300 or 500 has been something that the market's reacted to. We'll take a look. But it's going to be different market to market based on how much volume's transacting. And, lumber futures aren't going to have that much delta, right? Compared to the DAX or something. Identify strength or weakness. Identify contextual control and where that shifts. Identify dominant passive participants, and monitor along the way for these key inflections. That's how I use delta. Footprint chart. Footprint chart can be very, very complex. There's a lot of numbers flying around. I keep it simple. We already made a footprint chart. I was going to do that in this point of the slide, but we already made one. So there it is. As you see, it looks exactly like the one we built. The left-hand column is the bid volume. The right-hand column is the ask. The actual numbers, right? There's a bunch of numbers there. It's a mess, huh? But the actual numbers can be a little bit helpful. As with the delta, how much volume is being done in a market, that's going to vary greatly from market to market. The NASDAQ's going to look really, really thin compared to the 10-year treasury, right? It's going to be super thick. So learn what's normal for your market. But guess what? Your market evolves over time too. Volatility comes and goes, makes things more thin or thicker or stuff like that. So you just got to kind of stay up to date on what's normal for current. What would light volume be for current conditions? What would heavy volume be for current conditions? Now, we talked a lot about delta being almost a similar use to like a breakout pullback of a CVA or something. Well, the footprint chart, I kind of use like a little mini market profile chart. So we'll get more into that. What would we like to see to get short on market profile? Light buying into the high, almost kind of a wiki excess capitulation type feel, or maybe heavy buying and maybe we form a ledge, that breaks through, but then there's super light volume here and it slams back and that fails. Excess again. How about strong buying that can't go anywhere? It's trying, and it just fails, right? It's better if you get excess, but it can still happen. What about if you come in and you have a poor low, and then you come up and maybe we get that pattern and it creates excess and fails here? Guess what? If you're getting short here, it's great to have a poor low here because that's a great place for the market to try and get to. So, it's a bonus if below has a poor low if you're getting short. A footprint chart is a jazzed up, super short-term market profile, really volume profile. How do we actually use it? I look at when the auction is complete or not. What does that mean? We'll talk about it later. That can tell me, is it time to enter? Is it time to exit? We'll also look at incomplete auctions, and those can be left behind. They could be short-term targets, similar to a poor high or poor low on a market profile. And then the general read on trade facilitation, right? Is there balance here? Is it higher two-way trade type volume? Is it even one side pressing, and it's being absorbed? We can see that on the footprint chart as well as the delta. I usually see it on the delta. I find it easier. Incomplete auctions. So what in the world happened? Each of these arrows are showing us an incomplete auction. It's incomplete because it's not like this one or this one, which on their lows, or this one on their highs, have a 0. So on the lows, it means, in this case, 25 contracts traded into the bid. The bid never dropped out. So therefore, it's impossible for there to be any volume at the ask at this level, because the bid would have to be here for the ask to be here. And that didn't happen. Only 8 contracts traded into the low. The bid never dropped. But what happened on this one? 90 contracts traded into the low. The bid dropped, so the bid was here. No one ever hit it. But the offer was then hit for 37, and then the bid came back up to this price level where the 90 is. So it left behind what we call an incomplete auction. Think of it like a poor high or a poor low, where you've got two-way trade being done, trade being facilitated, volume transacting, multiple tests of an area. And so that's that lower setting that we turned on for the footprint chart to highlight and draw an extension line until future intersection for non-zero bid ask, whatever the setting was. I said, hey, Sierra chart, please highlight incomplete auctions for me. Thank you. So that's why each of those are highlighted, and then it draws a line until it touches somewhere in the future, AKA until the poor high or poor low is taken out. I want it to give me a line until it's taken out. Example from yesterday, imbalance pullback. Okay, so I'm guessing we're going to talk either about this sequence or this sequence. We were trading down, developing value area high was right here. Incomplete, and we went all the way up this many ticks, right? 1 point, 2 points, 3 points, 4 points, 5 points, 5.5 points, whatever. You got your FOMO, maybe you're chasing. Well, guess what? The low was still incomplete. So we actually turned back around, came down, grabbed it. This is not like a cherry-picked example. This was yesterday, right? This was an imbalance pullback. And so, yeah, do we never, would I never be long here because there's an incomplete auction? Not true. Sometimes when the narrative is good enough, you don't have order flow that confirms yet. You're like, oh, incomplete auction, but I'm going to take it. That's going to happen. That's fine. But sometimes when you need a tiebreaker, remember that's what order flow is a lot, and you were unsure about taking it, okay, it's incomplete. I'm going to wait. If it forces me to not get in here, and then maybe I have to take something here. If I get it, then fine, I'll take that. That's just the opportunity cost of using an additional filter in your trading. There's going to be times where it lies to you, you know? It's not perfect. But in this case, yesterday it worked out beautifully. So you get a momentum shift. Was there a completion of the auction leading up to that on the extreme of the low in this case? So let's see. Yeah, so here was the first push, right? And then it drifted all the way up from there, and then it came back down. That's what it is. It is this one. Because this one, as you can see, made a lower low. So it's this one. Okay. You remember, I guess it was Thursday of last week. A lot of us got long from here. I think I only took it up to here. I had some students who took it up to there. What did it look like? Aha. So again, first push 179 by 118, drifts up, comes lower, cleans it up 57 by 0, and now we get a momentum shift, right? All of that happened within the sequence here, right? Push down, push up, clean it up, and go. All right. Remember the other thing, we can use them to help time entries like we've just given a couple examples of. You see it complete, feeling good about the trade, you get the momentum shift, let's go. What about when you're in a trade? How might we use the footprint? What if you're short from some of these highs here or something, right? Let's say this is developing value area high and you're short from an extreme or something like that. Look at how this looks with incomplete. I know this was taken out, but then it's just incomplete. And then this was incomplete and it comes up and it's incomplete. Oh my goodness. Imagine if this was a day's profile with a poor high and this was a poor high and this was 2 days with poor highs and you got a composite with a poor high. What's going on? Oh, excess, right? We need excess through there. So on a short-term basis, if your stop is sitting above these poor highs and whatnot, like how silly is that? Don't just put a stop beyond a point like that intraday with all those stacked incomplete auctions. That's just really, really being the sucker at the table, That is a place where if the narrative is A plus, I'm still getting short. I don't care that the incomplete auctions are against me, but I'm not going to take a 1R stop out above the highs. I'm going to scratch if momentum isn't working in my favor. So not only is it good for maybe, preventing from being that guy that stops out and is getting, wicked a lot and is getting, too much. It's going to happen to everyone. But, I see some traders and their trading looks like, like it's like this and they're short and they stop out here and then it's that and they had no reentry here where they should, right? You're missing the sequence. You're missing the lack of excess. You're caught up in the excess being created. You're the sucker. And then you don't realize that it's failing and you're not getting in aggressively. And maybe, by the way, there was like a short here because FOMO before it reached the level and you got stopped out of that one, you know, incomplete auctions, all that good stuff can really help. But what about when you're in a position that's maybe working, Let's say you're long, maybe let's say, I don't know. let's say you got long here once this completed and started to turn. And you're thinking like, okay, should I stop out somewhere in here as this starts to go against me? Well, look at this. 38 by 0, 19 by 0, 17 by 0. You were 3 by 0 and 8 by you were very light volume numbers, all complete. And pretend there's like a Heikinashi bird turn, and so you're thinking, oh man, it's going against me. I'm underwater. Should I scratch? It's not working. This is not a sequence to be afraid of. This is where, if you've been around long enough, you've seen me a couple times. It's pretty rare, but you've seen me show some executions or whatnot where I let the trade go against me. I let it go through where my normal swing high or swing low stop would be. And I always get the question, Merritt, why did you do that? But there are times where the narrative is good enough, the trade location is excellent, and the order flow just doesn't look bad enough. Sometimes I just don't stop out on where I normally kind of would. And it's all about an order flow read and there being super weakness on the tape against me. Now, if it's super weak and it just keeps going and it's still super weak, but now I'm losing more and losing more, I'm going to pull the plug. Like, I'm not just going to, stay rational longer than I can stay solvent. That's not going to happen. But for normal variance in allowing a trade some extra room to work and whatnot, it is something that I will do from time to time, and this is exactly how I do it. Pretty rare, though. A lot of times I just take my medicine. Short-term target areas. It could be the opposite, right? Looks like a poor high, stacked incomplete auctions. Those are great places to look for boom, it's like a magnet. It goes and takes those areas out. I'll use those as places to be on the other side of the trade, taking advantage of the other people stopping out to take profits. So back to this example where your normal methodology, you're short from here, you have like a stop somewhere up here, whatever. Don't be the dumb stop out. If you identify it like it should work, or whatever, and then the momentum shifts against you, it's a place to come out. You can either scratch now, you can keep the dumb stop where it is, or you can, be on hopium. You could cancel your stop and you can say, all right, I'm going to just let it create the excess, and then hopefully it's going to turn around. Well, guess what? That's dangerous, because when we go through here, we never know. It's just like any inflection of any reference we use in the Nadra methodology, or whenever a poor high is being taken out. Does it always just wick a poor high and turn around? No, it doesn't. We just know it needs to go wick it at the least. It might just keep going because the auction was incomplete up there. That's what's going on here. It's not always so clear though, right? This is a good example where you see multiple. It's incomplete almost every time it goes up there. That's a pretty tall tale sign. Tall tale? I don't know. We can also look at the footprint chart and get like a general read, right? Is there really heavy volume? Is it really light volume? Remember, you have to learn your market, and your market will evolve over time. Rollover also affects this, right? You cut the contract volume in half because it's trading between two contracts. But in general, it's almost like balance and imbalance, right? Balance is going to occur on thick, heavy buying and selling all occurring within the same area. And imbalance is going to be light and fast through areas and things like that. Excess is going to be light. Balance or poor highs is going to be heavier, right? Use it just like a profile. If you're looking to potentially get in and price is coming down to, let's say it's a, extreme fade, it's coming down into this area. Maybe it's incomplete right here, so you don't get in, right? Maybe it's incomplete right here, so you don't get in. Maybe it comes down here and it's, 8 by 0, 7 by 0, and then all of a sudden they get a momentum shift. Do it, right? You had sellers that were drying up after there was incompletions. Well, now it's complete, and then you get a momentum shift. Each one of these also had momentum shifts after them, but they were incomplete. So we don't feel as good about getting in. Not as confident. Remember, we're still using shifts in momentum. The more advanced you get, perhaps you get quicker and earlier within that shift, but the concept still applies. To get great confirmation on an entry, we're in a trade location that makes sense with narrative. Okay, that's first and foremost. The acceptance picture checks out, rhythm checks out, DVA's offering something. Now it's time to go to some tactics and tools and maximize our risk reward and enhance our timing. So for me, great confirmations when I can fade some weakness on the tape, identify completed auction, the other side of the tape's drying up, and then I get a shift in momentum. I'm taking the trade. I like it. So one thing that I think would be really awesome for you guys to do would be to go back through some trades you've made, let's say over the past 2 weeks, where we've really had kind of an idea of what we're doing here. But this time, go back and look at your trades and see what delta and what the footprint chart said. See if you couldn't maybe avoid a loss here or there. Could it have helped your execution? Were there warning signs? Were there warning signs and it worked anyways because it had a really good narrative? Was there some good confirmations for your entry? Let's first use hindsight, just like remember we went back and we built composite structures in hindsight. This is a really cool way of kind of doing that because order flow is tough to just read from a static chart. Like, don't just look at order flow. It's difficult, right? You kind of need to see it evolve, especially on a footprint chart. The delta, you can pretty much look at it in hindsight. The footprint chart is more difficult. There's going to be a lot more incomplete auctions and different things that occurred, but then gets covered up and you can't see them anymore. But it's still a really good way to look at how it all shook out order flow wise with actual trades that you have reviews on and that you remember and that you can see your executions. See if order flow wouldn't have been helpful. Share some examples in the room of your kind of studies and what you find. It can be some really good conversations to get those juices flowing, get those reps in of seeing order flow. You can begin to simply observe order flow tools in real time as well. I know you're not just going to do hindsight and then ignore them. But I do encourage you to first only observe them. You don't need to make order flow a part of your process starting tomorrow. That's ridiculous. Use your journaling skills. Note interesting things that you observe with the order flow as you're trading. And make it a really good part of your review process this week while we're focused on order flow, observing it, that is, and review those sequences that you noted. Oh, that was interesting here. Oh, I think this is a real weakness, blah, blah, blah. I think there's a contextual shift here. Begin building out that experience. And then once you get more comfortable, there's plenty of time for you to work order flow into your actual process. You may love order flow. You may almost become more of a scalper, really lean on it heavily. Good for you. You may despise order flow and ultimately not want it to be a big part of your process or a part of your process at all. That's fine. I think it can add value. I know it adds value to me and what I do and the timeframes I operate on, but it's going to be up to you. So guys, NADRO is complete. So hopefully you've learned some really good things. Hopefully that like I started out saying, that you're going to see things that maybe you previously thought were not possible with markets and being able to see the narrative and speak the language. And so we're not just leaving you hanging on order flow. That's what's great about this week with me trading and whatnot, is you're going to see me day in, day out apply these things, right? Put it together. And so tomorrow when I talk, I will talk more about order flow now that we've covered it. Um, as well as we start with narrative, we're monitoring for acceptance, we're using DVA, we're using rhythm, and we're adding order flow. So this is the natural methodology, and let's have a great week and finish strong.